Good morning and welcome to this weekly market update from MRC Markets. Today is the 8th of January 2014, the first webinar of the new year. Hope you had a great Christmas and New Year's Eve. Hope you had a great trading year as well. What we'll do today is go through the usual stuff. So we go through technical analysis on, let's look at Euro, Dollar, Cable, Dollar, Swiss and Aussie, because I think they're the most interesting charts at the minute. They're the main ones I look at anyway. And yeah, just go through what's going on in the charts. We'll look at a bit more longer term as well, sort of maybe give you some sort of outlook for the next. Well, I mean, we'll go through the weekly charts daily, for maybe 1 hour as well. Look at what interesting setups are going on. See how last year ended off as well. Yeah, so mainly it will just be technical analysis. We have 3 moving averages in each of these charts. For any followers watching, red one's a 50 simple moving average, the purple is 100 simple, and the gold is a 200 simple moving average. We're not making any trade calls recommendations today. You trade at your own risk. If you could please read our full disclaimer on our website, which is www.mrcmarkets.com. Okay, let's have a look at the euro then. So this is, let's quickly flip it to this monthly chart actually, as this is the first one in the new year. We'll really look at the sort of long-term overall perspective. So I just need to change the colour of these. Give me 2 secs. There's a nice little shortcut here because the normally on MT4 it doesn't show the price next to level, and there's a little shortcut here, so you just go space dash space and then dollar, and then a percentage and pound sign there. That brings up the price next to the fib level, which is quite useful. So yeah, and these ones, for any new followers, we basically just mainly look, in terms of fibs, just look at the sort of the main ones. So the 50% 61.8, the main two in my opinion, and it's good for, I mean, when we look at moves, we can say we're looking for a sort of healthy retracement down to this sort of zone. It's the main sort of retracement zone, in my opinion. So they're the two that we mainly look at. It just keeps it simpler as well for these videos. Yeah, so this is the monthly chart. This setup is still in place. It's the real long-term move here. We've got this fib from the low of 2000 up to the high of 2008. Was it 2007? Let's have a look. Yeah, so the highs are sort of 2008. Yeah. Yeah, this is the fib move. We see this. We've got a sort of double bottom came in on this monthly of the 200 SMA as well, so 200 month moving average. And it's just still in the sort of grind higher modes. This move is technically still in play, so you'd have to say in terms of overall bias for the year, it's bullish in my opinion, because it's a bullish setup. It's still in play. But let's have a look at the fib from the other side of the coin. So from these highs here down to the lows, and you can see we're getting nearer to this 50%. We didn't quite get near it. Well, we didn't quite touch it, and that comes in at one spot 39.56s. But then you have a lot of people looking at this sort of shorter dips as well. So that one there to there. You have long-term sellers coming in at this 61.8 here, sort of pierced to 61.8, and not quite a reversal candle, although this month's candle is looking quite bearish actually already, although it is only the start of the month. But then you also have the 100 SMA lining up with this 50% as well, and the 50 SMA here, so the sellers may find it difficult to bring this down below these SMAs here, because there's quite a bit of support. So yeah, that's the real, and that's what I'm really focused on, to be honest with you. So it's this main fib here, and it looks like it's just forming a flag really. So sort of bullish flag. Let's change the colour of that. Yeah, so it's in a bullish fib and a sort of bullish flag formation as well. So I wouldn't be surprised to see that get broken over the course of the year. Right, let's look at the weekly. So in terms of the weekly chart, we spoke. Well, what have we been talking about really? This fib here is the main one. So I'm just going to get rid of the monthly one now, just to clear up the charts a bit. Yeah, so in terms of the weekly chart, we have this fib from the highs of 2011 to the lows of 2012, sort of forming a double top here on this 61.8% retracement, and sellers are going to try and bring it back down. We saw it the first bounce off, we came below the 50%, and we got a bounce off the 200 SMA. So it's all about that 200 SMA is again on this weekly chart. But last week's weekly candle is quite bearish indeed. That's, well, it's a bearish engulfing, bit of upper wick on it as well, not much lower wick. It's just a decent sort of bearish candle, really can't really put it any clearer than that. So I'd expect this week to be a slightly heavy week. And then in terms of the fibs from the other side, we've had, in terms of this weekly, we've had this one here. That was a decent one, sort of get the buyers coming in with the sort of 50%, 61.8% zone, and bringing it higher. That one got pretty much played out. So the next one really, I'll personally be looking out for. Well, yeah, you've got this one as well. It's not the greatest of fibs, but the reason it's okay is because you can see the 61.8% on here lines up with these previous supports. So key support there is sort of the one spot 27.48. Of course, we're a long way away from that now, but in terms of just looking at a weekly chart, that's a fib I'll be looking at. And then of course you've got this one here from the sort of lows of 2013 to the highs of 2013 as well. The 50% lines up with previous support as well, and it lines up with the 200 simple moving average, so keep an eye on that. In terms of, let's flip it down to the daily now. The daily, we've had some lovely fib moves, especially over last year, the end of last year. We had this one here, remember. So from that low to the high there, lovely bounce, pretty much to the pip, rotated higher. And then if you extended your fib towards the upside to the next swing high, bam, surprise, surprise, right off that 50%, pretty much to the pip again. And it rotated higher, and well, we got a spike above the 0%, and it's closed below. So the next one I personally be looking out for on the daily is all about this one here. But it's not the purest of fib moves, because it's sort of, you can see it's starting to top out a bit, and then not the greatest of fib. But you sort of want like a smooth uptrend, and that's why I mean this move here is pretty much absolutely textbook. So it's a solid uptrend, nice retracement, and bam up. But when you keep on having, look, when the highs starting to flatten out a bit, sort of imagine it as like a hill, and they're sort of curving around and getting flatter and flatter, and they tend to not be as good the moves, in my opinion. But anyway, it would be an interesting spot. I wouldn't be surprised to see buyers coming in at that level, which is the one spot 33.24s. But yeah, it's all about just looking at the price action. If you get a nice reversal off of there, then there's no reason why it can't rotate higher towards the upside. Other people will be looking at this fib here, I would have thought, this week. Zoom in a little bit here, so you can see the 50%. I mean, it's not the greatest of price action. The daily candle closed below, and normally that means that it wouldn't hold, and then we got to close it, and we've got a gap up, open above this 50%. And then it's sort of just, it's a bit messy really in between the sort of 100-day moving average and the 50-day moving average, so sort of chopping in between that. At the minute it's all about daily candle close either side of these moving averages. I wouldn't be surprised to see it close below, to be honest with you, and then grind lower, but there's nothing stopping it from rotating higher either, so it's all about just waiting for a daily candle close on that. In terms of shorter term moves, so let's flip it down to the 4 hour. The sort of short term sellers, I would have thought if we get a bounce up here, then that would be a fib there. So just looking at the sort of that recent swing high at one spot 38.92 is what I would have thought. A lot of people would be drawing their fibs from that level. So let's say if it grinds a little bit lower, then just move. Then I would have thought a lot of people would be moving it down and extending. If we get any bounces, just I would have thought people would just be selling at the 50%. So keep an eye on that. And then yeah, that's pretty much, if you flip it down to the 1 hour, that's the same sort of move really. So yeah, it's just quite a decent downtrend. I mean, it's getting a bit choppy around here. Ideally you sort of want it to do a straight retrace up, and then for it to sell off, that'd be a more pure move, because when it goes a little bit sideways and up and down, left and right, and then goes back up, they tend to not to be as good moves, in my opinion. But yeah, just keep an eye on the price action on that, and that's the euro done. So let's have a look at cable. Let's briefly look at this monthly chart, as is the first webinar of the year. So in terms of the monthly, nothing's changed really. This is the fib I'll personally be looking at. I think if you draw 38.2, it's pretty much lining up with this 200. In fact, let's stick it on there. Let's have a look. Yeah, I mean, this is quite interesting actually. In fact, it's closed above, so the 38.2% retracement. We had a monthly close last month. Last month it's closed above, and then you can see this month it briefly came below the 38.2, and you can see it's now acting as support. Buyers trying to bring it up, forcing it, creating a nice bit of a lower wick here. So I'd expect to grind higher on cable in terms of this weekly chart all the way up. We'll definitely towards the sort of 50% would be the ideal scenario, but you do have these moving averages here which are flattening out. This 200 SMA is very flat. When they are flat, they tend to be better, I think. But yeah, in terms of this weekly, it's all about this sort of 200 SMA, 100 SMA, and then the 50%, which I think it should grind higher and get to. So we'll keep an eye on that for this year really. Keep this fib in mind, and we can always flip back to it and check up what it's doing, because that 50% will be a key level if it gets up there. But of course we're a long way away from that at the minute. And then yeah, you got this fib here, which has been an interesting one. So this is from the low of 2009 to the high of 2009. That same fib. It's been an interesting one. In fact, if you stick a 78.6 on here, yeah, if you stick a 78.6, and you can see we had initially, imagine this move, we had uptrend, retrace back down, and then we had initial bounce of the 61.8, and then it got capped at the 50%, brought it back all the way down to 78.6, reversal up, grinded higher, got capped at 200 SMA, then came back down towards this 50% level at one spot, 52.71s, got a brief, quite a few lower wicks there, brief pop up, then it got capped at the 50 SMA, chopped around a bit, then we broke below, and then we test this 61.8, and now it's rotating higher. So really technical moves there. It just shows you how you can literally just look at fibs to sort of guide you in the market. So the odds are really that we're going to grind higher, I would have thought, and take out this 0% line. But of course, as we said, keep an eye out on those key moving averages, the 200 and 100. But yeah, that fib is still in play. I'll expect a lot of long-term buyers will still be in that play in these bounces off the key fib levels. Let's flip it to the weekly. So the weekly is the same thing really, although you can see the moves much clearer in terms of shorter term. So nice sort of candle formations there, nice reversal patterns, lovely sort of triple bottom there, nice moves up, and then you can see some nice sort of candle action here at the 61.8. So yeah, it's a really nice move. That it's always good to keep an eye on that and see how it's getting on, especially if you sort of get big retrace down, you're looking for big levels to look at, then those would be the ones to look out for. The other fib, which I think will be interesting this year, and I think should come into play fairly sort of soonish if we get retracement, is this one here. So from the low of 2013 to the high of 2013, if we get a retrace, it's all about this fib setup here. That would definitely be the low that I'd use. I wouldn't really want to use the sort of lows around here. I mean, they're okay, but if you look at the sort of shorter term charts, but in terms of a proper retracement, healthy retracement down, that would be the level, that would be the move that I'll be looking out for. But of course, we're a long way away from that at the minute. It needs a decent rate, about 600 pips away, 600 pips away. So keep an eye on that over the course of the next few months. Although, of course, it could just retrace in a couple of weeks and then come down to that level. You never know. In terms of the 4 hour, the 4 hour has been kind of messy, not been great in terms of fibs. This one I think is currently in play. Hasn't been that technical, to be honest. It's more a move off the 200 SMA here, but you can see it's been struggling to get above this 50%. We had a nice 4 hour close above the 50% in the previous 4 hour candle, so it looks like it wants to keep on grinding higher. But there's been a very bullish pair of cable, especially last year. You can see lovely uptrend last year, and and yeah, there's nothing stopping it, just grind high. As we said when we looked at that, the sort of weekly and monthly chart, it is just purely in grind higher mode, and I'd expect these sort of highs up here is the high of 1.70 to perhaps get taken out this year. We'll not be surprised to see that at all. But in terms of the course of this week, so I mean, if we look at last week's weekly candle, quite a bearish weekly candle, nice upper wick there off of previous resistance as well. In fact, the previous weekly candle had a decent upper wick in it as well, so I wouldn't be surprised to see some sort of sell-off this week. But well, you can see this week it already has come down a bit, and then this weekly candle's formed a nice lower wick already, so maybe it wants to keep on rotating higher. But in terms of shorter term moves, it's quite tricky. In the sort of the shorter term sellers, if we look at this 1 hour chart here, they'd be looking at this fib here. I'd have thought if we continue to grind higher, it needs to get above this 100 SMA though first. Then at 50% at the 1.6470s should be quite an interesting one there. I'll definitely be keeping an eye on that if we get a brief pop up this week. So that's cable done. Let's look at the dollar Swiss. Dollar Swiss on the weekly is still pretty boring, to be honest with you. Nothing majorly of interest. This fib's still keep on looking at this one, waiting for it to sort of retrace down to its 50%, but it still hasn't come down there yet. But in terms of the weekly, that's pretty much it. I mean, it's more interesting stuff on the daily. I'd have thought the daily chart was really technical. Last year we spoke about these sort of dips, lots of sort of fib dips here, so that was one off there of the 50%, and then remember we grinded lower, took out the lows, and then drew another fib from the 61.8s, and it rotated towards the downside, and then you've got this other one here. I mean, some people will be looking at that one, but that one's technically out of play now. Well, I suppose if you draw 78.6, it could be getting near. So that'll be the next one I'll be looking at for. It's all about just waiting for the candle, the price action. Now, a lot of people put in the sort of pending orders at these levels and hope for the best, but I think it's a safer way to look at the sort of the candle action. Just wait for it. If you get a reversal candle, then get in. If it doesn't reverse, then don't get in. It's as simple as that, really. So yeah, the shorter term dips could be interesting, or as I think with the euro as well, just look at the bigger fib. If we get up there, we're still a long way away. We're talking about 200 pips off it at the minute, but that could come very soon. You never know. But currently on this daily, it looks like it just wants to grind higher towards this sort of 200-day moving average, which currently comes in at 0.9214s. In terms of the shorter term charts, the 4 hour, in terms, as I personally think it will keep on grinding high. If we do get a retracement, I personally be looking at this fib here on the 4 hour from the lows, the 26th of December. I think it's 26th of December. Let's have a look. Yeah, the 27th of December lows to the current highs. Let's say if it just retraces here. Let's say it tops out, retraces here. This 50% currently comes in at 0.8950s. But if we keep on grinding higher, then just extend the fib higher. But that's definitely the low I'd use. I wouldn't want to bring it any higher and look at the sort of shorter term lows. I always prefer to look at the more obvious swing lows there, because it's the same on the daily chart as well, and 4 hour and the 1 hour. So it's the more obvious fib, I think, work out the best. And finally, let's look at the Aussies. This is the weekly chart. What have we been speaking about on Aussie? We haven't really had a look at the weekly chart, to be fair, in a while, or even the monthly. Actually, let's look at the monthly. Stat fib there, which I'm mainly focused on, and the 50% comes at 0.85. So if we keep on grinding low, that would be the level to look out for. But we're still, of course, a long way away from that. In terms of moving averages, the 100 SMA was supporting on this monthly. Throughout last year, we got a brief pop up, but we sort of grinded low, and we actually got a monthly close below. So odds would be that we keep on grinding lower towards this 50% level. And yeah, on the weekly, it's pretty much the same thing. Nothing different at all there on the weekly. But what we did have last year, if we're going to give a brief recap of last year, it's all about this move. Remember. Spoken about that many times. So from the highs of the year to the lows, we retraced up, we bounced off the 50%, a lovely reversal candle put in, and we grinded lower, and pretty much we're currently just sitting on this 0% list, so it hasn't been able to break below. And what is interesting, last week's weekly candle was sort of bullish engulfing, although it's got a bit of upper wick, which I don't personally like. but odds would be for this week, I would have thought to get a brief pop-up maybe. Was certainly over the next few weeks I would have thought that we'd sort of grind higher here, but it's all about the weekly candle closes. As long as we keep them closing above this 0%, then the odds are of a retracement upwards here towards this 50 SMA, or even the 50% retracement here, and then we can sort of get a double top. We could potentially get a double bottom and a double top form there, and then it will sort of it'll be a very sort of tug of war with the Aussie for the rest of the year. Yeah, in terms of daily, the same move really. Very, very interesting move here. I think it's key support. Then there's this sort of 0% that we put in the low of the year from the fib move. It's pretty much the key line in the sand. The sort of 0.8846 is. It's all about hold above or below. If we close below, well, I suppose you could extend the low now because we actually got a daily candle close, but slightly below that. So if you look at the fib there, so that's the original move. I should zoom in here actually. Yeah, we've got a brief close below there, so I'd personally move it so that is the low put in there. So if you're looking at daily candle closes there, you want to be looking at that one in my opinion. In terms of shorter term moves, the 4 hour is pretty messy at the minute. It really is just looking for direction, nothing majorly of interest there on that 4 hour. You can see the 1 hour is just very, very choppy indeed. Yeah, that's the sort of, well, it looks like a lot of people look at this fib here. I personally don't like it. I think it's a bit messy, but we had a sort of spike below that 61.8. It pierced below and it's trying to grind higher, but you can see it's getting capped at the 100 SMA here on this 1 hour. And it's trying, well, it's currently holding it. Yeah, it's just chopping in between. Nothing majorly of interest on the Aussie, unfortunately. On 4A, you can see it a bit clear as well. It's got 2 SMAs slicing through it. I think that's why we're getting a bit of choppy action on the Aussie. But yeah, it's all about, in terms of the sort of levels, it's all about the sort of the 88.20s, or if you look at the sort of round numbers, the sort of 88.50s key level there. Let's put that on the chart. The round numbers are always good to look at. That'll be a key sort of option expiry level, I'd have thought, that a lot of people will be looking out for. Okay, then that's all for today. Hope you found that video useful. If there's any other pairs that you want me to have a look at next week, then feel free to comment under the YouTube channel or send us a tweet to our Twitter feed, which is @MRC_markets. Yeah, I hope you found that useful. Have a great rest of the week trading, and I'll catch you next week. Thanks for watching.